And a happy new year to one and all, because today is New Year's Day. And what am I going to do today? Well, mainly I'm going to show you how to set up a Vanguard. And it's a little salute to John. Salute to you, kid. Because he did drop a message asking he'd love to see it being set up. And I said I would do it for you. And here we are. But what else is today? Well, it's New Year's Day is a good time for reflection. Look at what happened in 24 and what you're going to do in 25. Now, I learned a lot through 24. My trading is exactly the same. And all of this sort of stuff that you see all the time. Oh, new year, new me. I'm going to go to the diet. I'm going to go to the gym. Oh, I'm going to drink less. Well, there's going to be none of that with me. I'm going to be the same dickhead you've always known.
Oh, here we go. No.
Why? Because I'm just me. I am who I am. And I can't change that. And do you know something? I don't want to change that. And what you see here in the public videos is pretty much the same as what you see in the Scruffy Squad. I'm quite approachable in one thing or another, but I'm also quite blunt. You know, I don't tolerate dickheads because we have a no dickhead sort of culture in there. So if you come in shouting and bawling, you get told to fuck off.
Jesus Christ, dude.
It's that simple. But if you come in and you're sort of full of wonder and glee, it's lovely to see, but we'll also knock a few of the edges off, because over trading and things like that is a bad thing, you know, and you can fall into gambling because of excitement. Try and calm that down. These things are not going to change. Why? Because it's for the greater good.
I'd buy that for $1.
And also because it's just who I am. But what else happened? Well, we did upscale a little bit. And there's certain elements that should be professional, certain elements that shouldn't. When you're just in the Discord and we're on sort of camera, we have a laugh and one thing and another. But we did a classroom in Benidorm, and we're doing it again this February. Let me kind of show you. In February this year, we're going to this hotel. I've booked it. It's a ticket-only event. It's sold out in hours. Literally, poof. And a lot of people were disappointed that they didn't get a ticket. But it was a first-come, first-served basis. And if there's still an interest, I'll do it again in June, just for you guys, you know. But the one that we're looking forward to, what we're building up to, is this one. This is in Benidorm in October. We did Scruff in the Sun. And when we do a classroom, we have a good time, one thing or another, but it is exactly that. It's a classroom. You know, there's a full agenda. It's not ad hoc. We go in, we talk, show you exactly how the markets work, show you how your mindset works, and then put plans of action in, and then you come away and we have a little bit of a drink afterwards. It was a fabulous event. Absolute fabulous event. So that's kind of what we're going to do this year. We're going to concentrate more and more on these events, but only if you want it. You know, drop it in the comments. Say, yeah, I'll go. But as with most things, just saying you'll go doesn't mean say you will. You've got to actually put commitment in, and that's what trading's all about as well. Everybody can be a gunner, you know. And for those of you who don't know what that term means, it's always, I'm gonna do this. Well, no. You either do it or you don't. And trading is the same. You know, but you've also got to treat trading with respect. Full respect.
There is no try.
And that's why when I'm building up small challenges, they are far more important than seeing big money. So when you see somebody that's flashing the cash around, going, oh, look, here's my £100,000 account. Yeah, it's amazing. Look at all this money I've made. Does it actually benefit you? No, because it's out the ordinary. It's not normal. So when you do a small account and you're looking at 200 or 300 quid and then turning that into £1,000, now that becomes meaningful. Now let me just give you a second. I'll show you something.
Well, we're waiting.
Hey guys, so here's an account, live account, so there's no rollbacks, add-ins or anything like that. It's got a decent balance in it. Let's just pull this up a little bit and we'll show you some sort of history to it. So how far is this back? So we'll go back, what? This is into beginning of November. So a few months worth of trading. And you run it down. Can't get it right all the time. Run it down. Bit of a bad day. Run it down. More bad days, but not too many. But look at the blues. The blues are far outweighing, certainly a bad day, but the blues are outweighing the reds massively. Okay? And it's sustained, and it keeps on going and going and going and going. All the way down. Okay? Now I can keep it running over and over, but there you go. You can see that it runs constantly and then down to a final figure. Does that help you in any way? No, it doesn't, because you've got to build to that level. I personally think you're better off looking at an account like this, which is what I'm going to be doing this year, when you pull in something like this, where you'll use a small account, use the leverage in order to open up an asset, not position size, and start it with a very small balance. So I'm starting small and I'm going to build that up. That's what the Vanguard is all about. Now the Vanguard itself is, I took all the investments out of it. I'll show you in a second as I show you how to set that up. And I've left a $5 in one of the pots just to keep it open. And the goal is to pay for Benidorm. Now my personal cost to Benidorm is about £4,500. Right? Because I've got to pay for the venue, got food to pay for the guys. My own sort of costs, etc. But it's going to cost me about $4,500. So in order to do that, I'm going to trade up small accounts. Now I've got two of them. I've got a web trader and that BlackBull. One has 250 in it, the other has 200 in it, and I'll just build it up and I'll track it on these journals. You've seen them 101 times, so I'm not really going to go through it, but you'll track it through on these, and then I'll track the Vanguard on this. And the idea is to get that Vanguard built up. Okay, so that's the plan. So how would you get into Vanguard in the first place? Well, let me just fire it up and I'll show you. So bear with me while I log in. Okay, so I'm logged into my Vanguard. It's currently sitting at just under 100,000. It has dropped back last month. It actually lost 1,300 last month. Now the thing with longer term investments is they do go up and down like a yo-yo, and I'll show you how to set these things up. But I wouldn't worry too much about that, because as it moves against me, it means when I put money into it, I'll get better units. It's kind of a dollar cost averaging or a madness system, okay? And as you can see, it's done quite well, you know, all the way through. So I'm happy with that. So what am I going to do with it? Well, first of all, I'm going to take advantage of the ISA, which is here. And there is the $5 left in this one here, which is V3AB. Now I'll show you how I found that and the way that this works. Now Vanguard is very simple. It is just somewhere where you can put your money in stocks and shares and then forget about it. Let it grow naturally. So how would you pick it? What would you do and set it up? Well, first of all, setting up a Vanguard is about as easy as it gets. You just come in onto the site and you would click that button there and then fill in your name and address as to what you are. Now, you can put it into a SIP, self-invested pension, where it'll be locked away for a very long time. You can put it into an ISA if you're in the UK, and then you'll get tax efficient because you're allowed 20,000 per annum tax-free that you can put into it. Or you can just put it in a standard account and you'll pay your taxes normal on that, okay? Now, they do also have junior ISAs, so if you've got kids and you want to invest on their behalf, you can drop that in. And I can't quite remember off the top of my head, but I think it's 9,000 you're allowed to put into one of them. Okay, so you would drop that into there, fill in your details, very simple. But then what? Okay, so if you come down here, well, there they are. There's the funds that I've just been talking about. So you've got your Vanguard ISA, the Junior ISA, the General Account, and your pension fund. Okay. Now I use a combination of the ISA and the pension fund. Why? Well, it's surplus money that I know I don't need. I drop in the pension. I can get it out pretty much any time from April this year when I turned 55. But my plan is to leave it in there till I'm in my 60s, and then I'll draw it out and do something with it. But my ISA, I can get hold of it at any time. So it's always a slush fund if I need some extra money. Okay. Now, they also have these funds, and they're done in such a way to make life easier for you. So once you've opened up one of these accounts, you would pick a fund. Now, if you just go to your list of funds, what you'll have is 86 to choose from. Now, if you click this button here, it'll also tell you what the past performance are of each one of them. You have to bear with me. Oh, dear me, coughs. So I need a coffee. Because we all know Scruffy likes a coffee. God, and he does today. And you just pick what fund you like. Now, to sift through 86 is quite difficult. So you can drop it down somewhat. Now, depending on your risk appetite, start here. Okay. Now, I like 5 and 6. Why? I've got a reasonable tolerance for risk at this moment in time, if that's what you want to call it. I still call them investment. I think sometimes terminology can sway your mindset. And again, it comes down to gambling trades. My theory is, if I'm risking something, I've already lost it. If I invest something, I'm going to watch it. Very different in the way you look at things. Now, the next part of it is, do you want it active or index? Active means somebody's going to manage the fund for you. Index means it's just going to track something like the S&P 500, where it'll just follow through. Personally, I like index. It outperforms managers every time. Okay, I don't need an income from it. So all of the dividends and interest it makes, I just want it to go back in the pot automatically without me making a decision. So I would click accumulation. Right. So that's pulled that list down to 43 results. Now the next part of it is, where do I want to put my money? Well, you have these, which are pre-packaged things by Vanguard, where they'll put the best bits into it, and essentially it's sort of a mix between stocks and bonds. So for argument's sake, this one here, Life Strategy Accumulation, it's 100% stocks, whereas this one's 80. What that means is it's got 80% stocks, 20% bonds sort of thing. Okay, it's a little bit safer. And you can work your way through it, but you can go, right, what do I want? Well, I'm a big believer in the old saying, buy the haystack, not the needle. Why is that? You can pick individual stocks, but the chances of you hitting the right one is lightning in a bottle. You just don't know. But if you've got all of the stocks in a basket, a global fund, if you like, the strong are going to sort of balance out the weak, and you'll flatline. So look at a global market. Well, that's pulled it down to 16 results. As you can see here, 16 results. And then you can just work your way through, see which ones you like based on the performances that they've made. But there's also costs involved as well. Now, for me, I use a FTSE All Cap. Is my main, and the reason being is it performs incredibly well, and I'm quite happy with it, which is here. Okay, and from there you just pick, go, yeah, happy with the performance, I like what it is, click invest now, and away you go. It's that simple. Okay, now what I've done for the small account, I wanted it cheap as well. But I thought, you know something? What about emerging markets? You know, and you can look at various different emerging markets that are cheap. Now, you mightn't be happy with that. You might think, well, I think the US market's going to go well. So you just click the US, and there you are. You're down to 2 funds. Now, the S&P 500 has done incredibly well. But most of the companies in this S&P 500 are also in the FTSE All Cap. So it's a good mix between sort of the big tech giants and the rest of the world. But what else do you need to know? Well, if you click this button here, it'll then start telling you everything you need to know about the particular fund. And it's horses for courses. You know, if you want to be less risky, just dial the risk number down. If you want to be investing in your domestic country, like you might say, I want to invest in the UK, just click the UK. Very, very simple. But here, it'll tell you what the minimum price is at this moment in time, because it's bought in units. So each unit here is $89.95 at the time of the video. There's 503 stocks in there, and the ongoing charge is 0.07. So it's peanuts in charges, and it's got a reasonable return. And then you can look down here, it is an index, and then you can see what the various tickers are, etc. Because you don't necessarily have to have the Vanguard set up on a Vanguard account. You might go to a different provider, and you would know what the ticket number is, and you'll be able to find what the index ticker is here as well, so you can track it. Now, the ones I do, I can track them on my web trader, and I can keep an eye on what's going on. But once you've put money into it, that's it. Just forget about it. So that's Vanguard in a nutshell. And I hope that helps you, John, because I've done today primarily for you. It's really set and forget. Just put your money in and then don't do anything with it. Let the account look after itself, and then monitor it maybe once a month, once every 3 or 4 months, and just see if you're happy with it. But one thing I wouldn't try and do with an index fund like this is try and time it. It's very difficult to time it. Just put your money in and keep adding in and let it grow naturally over a couple of years. And you'll find it does quite well. I'm saying a couple of years, really wants to be about 5. And you'll find the rewards are far better. Now, that's one way of forward planning, and it's kind of a passive income, which is one of the things that I'm doing this year, because you have sort of your active investments and your passive investments. Vanguard to me is passive. It's like Save the Change is passive. Using something like Quidco is passive. Makes you money without you actually doing anything. And then you can trade your small accounts actively and then recycle those profits into something that's passive, and you'll find you build half decent accounts as you move forward. So I hope that makes sense. So going forward, what we're doing is, do drop in the comments, encourage to keep the channel going. Do hit like, subscribe, all that sort of thing. If you missed out on February, don't be too worried about it. If we get the interest, we're going to try and do these every 3 to 4 months. So at the moment for this year, the plan is February, June, and then October, and then we'll see how it goes. But because the February event, there was only 20 tickets available, and it sold out pretty much in hours. And the reason being is we got all the emails came in, and we just went down through it. Now, the Scruffy Squad got it first. They had first bite at the cherry, and then it was a case of who put the deposit in first. And then as soon as the number was hit, we still had emails to answer. It was easy just to put a bulletin out saying it was sold out. But from there, the interest was great. We're considering doing it in June, but it'll be a bigger event, and we'll try and book a bigger room with more seats. But it all comes down to who shows interest. If there's only 2 or 3 showing interest, we'll have a small room and it'll be gone in a couple of hours. If there's loads and loads, I'll get a venue that can host all of you. I think that's the fairest way. So I'm off on my cruise tomorrow. I'm going to be treating Winky to her Christmas present, because that's what we do for each other. We buy each other a holiday and let the market settle down for the first week of the year, because they're normally all over the place. And then I'm back to it on the 11th. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.